I hope you're all doing well. I'm Alvin, and this is the Wealth Indicators channel, where like-minded people connect and discuss personal finance concepts. The topic for today is how banks and credit unions make money. There are more than 11,000 federally insured financial institutions in the United States, and there's a good chance that you do business with at least one of them. So it pays to know how they're using your savings that you deposit with these financial institutions to generate revenues and profits. There are three major types of banking institutions in the United States. They are commercial banks, investment banks, and credit unions. Commercial banks are the financial institutions that most people know and do business with. Most of the operations of this type of institution is geared towards retail banking, meaning that most of their customers are individuals and small businesses. However, some financial institutions, especially the largest ones, usually have both commercial and investment banking operations. Examples of this would be JP Morgan Chase and Bank of America. Credit unions operate very similar to and provide many of the same services that commercial banks do. However, there are a few key differences. The first major difference is that commercial banks are for-profit institutions because they're usually public or private companies, while credit unions are non-profit institutions that are owned by the members who have their funds in the union. As a result, every member of a credit union is a shareholder, while most customers of commercial banks are not. Another major difference is that credit unions usually have lower interest rates and fees compared to commercial banks. But commercial banks, because of their larger scale and footprint, usually offer more services and have more branches and ATMs. Investment banks, on the other hand, are very different. Their principal clients are large corporations, governments, and ultra-high net worth individuals. As a result, they usually don't have many branches. But they do make it a point to have offices in the major financial centers of the world that include cities like New York, London, Zurich, Hong Kong, Tokyo, Shanghai, and Toronto. Investment banks are designed to handle the more complex financial transactions that are integral to a growing and vibrant economy that include helping large companies raise money through debt by issuing corporate bonds or by selling shares to the public and raising capital that way. Both commercial banks and credit unions make money by first accepting deposits, then using those deposits to make loans to individuals and small businesses, and then charging interest and fees on those loan products. The most important concept we need to understand about how commercial banks and credit unions make money is the spread, meaning the difference between the interest rates banks charge for their loan products and the rates they must pay to their customers and other banks to borrow. The interest rates that banks and credit unions pay to their depositors will always be lower than the rate they charge borrowers to take out loans. The difference between these two rates of interest minus the operating expenses for the banks and credit unions is their margin. Banks report this as net income, while credit unions return it to their members in the form of lower interest rates and fees or as a dividend. Investment banks make their money by charging fees for the services they provide that include but are not limited to wealth management, mergers and acquisitions, raising capital, and market making. Understanding how banking institutions earn their revenues and profits, even if you don't work in the industry, is important because it allows you to make intelligent decisions regarding how much of your hard-earned savings you want to deposit with these financial institutions. Pick up your copy of my book, The Wealth Indicators, on Amazon today. And if you think this information is valuable, like and share this video with anyone you know who would be interested. Leave a comment or question if you have one, and follow the channel for more ways to improve your financial life. May the best of your today be the worst of your tomorrow.